Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great session. So we have the FOMC coming up here in the next hour and a half. Obviously, let me make an adjustment here. Obviously, we are. Sorry, I was laughing at something that Mr. Kim just posted in the chat room. But there's some news out just a moment ago that out of the UK, the lower house is going on holiday, so they're taking off for Christmas. That doesn't mean a deal's not going to get done. That just means a deal's not getting done like right now. And so we are seeing the cable reverse here. And that makes me a little nervous because we did have a false breakout above this 135.40 today. And I'm gonna give hats off to Amanda. She's already out, but she shorted it at 135.42, I think. Man, and I almost followed her into that trade. And I said, I'm going to deal with the dollar yen. And I didn't. So, but there's a good chance now that the cable could slip and maybe back into the 133, 132 range, maybe even as low as I hoped it would go down to 130. That's where I'd always hoped. But what's more alarming right now is the euro is testing the breakout point here. Dollar index is also testing the breakdown point here. Now, if you are in the chat room, you know that I've already bought some dollar yen, and this is creating a false breakdown here below the 103.65. I've told you guys, and I'm going to reiterate, I'm not really sure what the drivers are in the dollar yen, but I knew what my risk was. I'm like, okay, well, if I get long some dollar yen here at 103.40. 7 or whatever price I paid, because I've kind of been in and out a little bit on this bounce. But I knew that the risk is below this 103.20. And my other thought was, well, if bonds continue to sell off, we can get this melt up in equities at the end of the year. Stocks continue to melt higher. It's going to take the yen crosses with it. And I look at the euro yen, it's still, flagging, if you will. The Aussie yen is trying to flag too. Kiwi yen is, holding up. New Zealand or Canadian yen actually hit key resistance overnight and came off. But still, I look at the yen as being a proxy for, stock market rallies if we continue higher. So the yen should continue to stay somewhat weak. And it's also a hedge against the dollar in case the dollar does decide it wants to rally today. So I'm playing a little bit of dollar yen long. I'm not super excited about the trade because it's not like I'm looking at the dollar yen going to 106, although that would be nice. But I do think above this like 103 75 level should squeeze us back above 104. I think that's entirely possible. So anyway, that's what I'm doing personally, and I think we got to watch the euro, especially if the euro starts to slip back below like 121.50. Now we do have the FOMC coming up. Am I expecting the FOMC to be dovish? Well, I don't think they're going to tell us that rates are going up anytime soon, but what I think could potentially happen is they maybe are not as dovish as the market wants. Do I think that the dollar do I think that the FOMC is going to stay dovish? They're going to stay dovish, but they might start to cite the improvement of data and maybe say we stand ready to offer any type of liquidity if needed, but more importantly, they're going to continue to look for fiscal stimulus and cite how important that is. I don't think anything's really going to change a whole lot, but it could be a risk for the dollar to maybe squeeze a little bit, especially if we end up getting a false breakout in the euro, false breakout in the cable, false breakdown in the dollar index, false breakdown in the dollar. And matter of fact, let me take you over to the Kiwi. The Kiwi is really struggling at resistance, you know, and a move below 70.50 might actually take us back down to 70 cents. The Aussie also, you know, we keep touching these highs. We might slip back towards 75 cents, maybe 74.50. And frankly, I'd like to own those down there for next week as we, you know, head into the end of the year. But what I'm hoping for is we might see something that looks like this, right? Or the Kiwi that might look like this. So, and you know, and also you look at like dollar Mexican peso, dollar Canadian, you know, dollar Canadian might actually make a move here. For those of you that are in the chat room and you played the dollar Canadian to the long side yesterday, great trading. You know, way to go. I think that was awesome. It was a really good read. And you know, if we can break above the 127.75 level, it might squeeze a little further too. So anyway, let's stand pat for the Fed. I think it's important that we watch and see what the FOMC delivers here in the next hour and a half. I'm not expecting fireworks, but I think that we do have a little bit of a risk of a continued dollar bounce. All right. And that would be a bummer to dollar bears because, and let's not ignore the fact, let me get over to the dollar index. We came pretty darn close to the 161% extension today. Like I said, I came in, and by the way, I just got out of this. I came in long the euro. I got out at 121 96, 97. I picked up some at 121.71, and I already just got out of it, took a couple pips out of it and said, you know, I'm a little worried here. Okay, I am a little concerned. I think overall the euro is going higher, but you know, the euro might slip a little bit. We might actually, you know, come off here today and maybe back down to, hold on one second. Oh, I had to sneeze. Might come back, you know, down back below 121 before we move higher. Anyway, guys and gals, I want to thank you all for your support as always. I want to say that, you know, the active patterns in play are probably going to be zero, at least from me, until the beginning of the year. All the trades that I do are going to be more short term in the chat rooms because you know, putting out new patterns when the liquidity gets poor and you know we're at the end of the year, I'm not keen on that right now. So you'll see the active patterns in play will probably stay zero until the end of the year or till the beginning of this next year. Greg, I might throw out something, but as far as myself goes, it'll probably be pretty quiet. All right, guys and gals, I want to thank you so much for your support and your patronage, and I'll see you guys in the chat rooms or on the Face webinar tomorrow morning. Good luck with the FOMC today. Thanks.